Are you curious about how to get the best rate on your mortgage? Do you feel like the rates are a moving target, hard to lock down? Well, today we're answering all the most frequent questions from our clients, so stay tuned for all things mortgage rates and let us provide you with the truth behind the numbers. Welcome back to Keeping Your Business on Track. I'm your host, Joe Harris, and I'm here with Nick Morgan. How you doing, Nick?
I'm doing great, Joe. How are you?
I'm awesome. So what are we talking about today?
Today we're going to be talking about mortgage rates.
Awesome.
Yes.
I love mortgage rates.
Yes, we do love mortgage rates. Obviously, it's probably the most pressing question that we get from clients all the time is just anything and everything related to the rates.
Yes. I mean, everyone puts a lot of emphasis on the rate, right? What is your rate? What is your rate? I hear that a lot.
Yeah. So, today we're going to be going over some of those questions, some of the most frequent questions that our sales team, or I'm sure you've gotten in the past, and things that just might be a little bit not well understood about how the mortgage rate is established.
Right. I think everyone wants the best rate they can get, but they don't understand all the nuances, what makes up the rate, how it's formed. They just know they want the lowest possible rate.
And I think a lot of people, they kind of get the idea or the trend of if they're going up or down, but they might not understand what the difference is between theirs or someone else's, and so on and so forth.
Yeah, and the news, the media, they get information. They say, oh, the rates are down. Well, they're getting a week-old information because Fannie Mae or Freddie Mac usually do their surveys. They release them like today or Wednesday, let's say. They release them on Wednesday, but it's for the previous week. And so while rates might have gone down this last week, they might be up now. So by the time the media gets it, the consumer's like, I thought rates were up. I thought they were down. And, they're different. So
exactly.
That's just one of the little nuances. But really, there is so much confusion around rates, and not all rates are equal. They're like, how could that be? It's just a specific interest rate. But when you look at rates, you can't separate rates from fees, okay? Because you might have one lender that has the absolute lowest rates, but they have the absolute highest fees to get that rate, or vice versa. And not all loans are created equal. And how you get them is obviously not created equal, because that's the service that wraps around our businesses. So what kind of questions do you have for me today?
Absolutely. So I'm just going to kind of act like an inquiring borrower, and see how a typical salesperson might respond to this.
Well, I'll do my best.
Okay. Awesome. All right. So what's the rates today, Joe?
So just as a side note, this is the most ill-informed question, you know. So the typical answer, you're going to get answers that widely vary on this. If you say, Joe, what are the rates today? I might say, what rate are you looking for, right? Because you can get any rate you want, whether that be from 0% or to 100%. You can get paid a lot to take a 100% loan. You can get have to pay a lot to get a 0% loan. If you want a 0% interest loan, it's just how much is the purchase price? You give me that amount of money, I'll give you a 0% loan, right? No, but seriously, when someone asks me what are your rates today, they're almost just, they don't know what they're doing, and they're typically just asking that because they think that's what they're supposed to ask.
Right. Yeah.
But the reality is that question, it's really tough to tell people what their rate is going to be.
Right.
So when people ask me, what are the rates today? I might say they rate, widely range between here and here, depending on your specific situation.
Exactly.
Because that's what it's all about, your specific situation. Because all rates for everyone might be a little bit different.
Right. Okay. Yeah. And so in that case then is, then what's the best rate your firm or your company can offer me?
Right. Offer you.
Yeah.
Well, in order to do that, we need information.
Right.
If you just call off the street, hey, what's your rates today? We have rates as low as X to Y, right? But that means nothing to that person. So I'm not trying to skirt the answer. People are like, oh, that guy's just being a salesperson. He's not answering the question. Tell me what my rate is.
Right.
I can't tell you what that is specifically until we get your info. And now it's become so complex because the rates are determined, the lenders determine their rates. That's a true statement.
Yep.
But it's based on what they can sell that loan for. Once they do the loan, they close the loan. And when they sell the loan in the secondary market, either back to Fannie Mae or Freddie Mac or to a big, what we call aggregator they buy loans in bulk and they sell them to Fannie Mae or Freddie Mac, or they securitize them to Ginnie Mae. And I'm not trying to confuse you with lots of acronyms and names, but it is a complicated process. But the reality is where they can sell that loan or what they can sell that loan for will dictate the price on the street. So lenders don't typically just make up whatever rate they want and hold that forever. Rates can change on an hourly, daily, weekly basis, depending on what's going on in the marketplace. We've seen rates change a couple times within an hour.
Yep. Yeah.
So what the rate was yesterday isn't necessarily going to be the rate today. So what's the best rate my firm can offer is a great question, but that might not be what I can offer you.
Yeah.
So, recently even there's been updates that I can't really give someone a full accurate quote until I've received an idea of what their income is, because their income will drive what's called their debt to income ratio. How much money you bring in versus what your debt obligations, verified through a credit report or the new housing payment, things like that. Excuse me. And so that debt to income number, it will affect your rate now. It didn't used to be that way. Debt to income didn't used to have a wide impact on your rate, but now it does. So even once you're quoted a rate, if your income changes, that could change your rate.
Right.
Your loan to value, how much you're borrowing versus the home's value will affect your rate. The credit score will greatly affect your rate. How much you put down, that goes to loan to value. But there's what kind of house, if you're buying a house or a condo, could affect your rate. The more you put down, the better your rate's going to be. The less risk to the lender is going to have a better rate.
Yeah. All right. Sweet. And so with all that information, you kind of explained it, but a lot of people also ask, one lender might just post a rate online.
Right.
Now, why don't they just post the rates up front? That's a little shady, don't you think?
It's not that it's shady, because there's lots of rules and laws based on it. And I understand the comment, but why don't do some lenders? You know why? Because I don't like posting rates that the majority of people aren't getting. And the rule even says, if you're going to post something out there, if it's special, it has to be widely available.
Right.
But if you're posting the rate, if there's rates posted, you got to read the fine print. Some of them might say 800 credit, maybe not 800, maybe they say 780 credit, 25% down, this kind of loan, and that might not apply to you.
Yeah.
So you're looking at a rate from a lender they're not doing anything illegal. It's just that that rate might not be available to you.
Right. Yeah.
It might be, but by the time you called in, they're trying to get you to call in. You're going to call and see this, what I call a teaser rate. And then they're going to sell you on why you can't get that rate, but they're still the best person for the job.
Yeah.
Yeah.
Yeah. You have no idea what kind of fees or points. They might be like, hey, you got to pay 2 points for this, or, perfect credit, stuff like that. So
yeah, a lot of those rates that are posted, they might have fees or high fees or high points or origination or discount points associated with it. And so any lender might be able to get that rate at those fees. And it probably says the fees somewhere. It'll probably say the APR, the annual percentage rate, which takes into account to some degree the fees, but it's also something that can be manipulated.
Yeah.
So just to pull it back, what is our best rate? Well, it's what is your best rate for me. And so to do that, we'd have to talk to a borrower, get some good information to give them specifically what their fees and their rate would be.
Okay, sweet. That totally makes sense. Now, like we touched on again briefly earlier, now, if the rate's changing, why is it changing? We talk about this a lot regarding like the Fed and the economy and
Right.
stuffs along those lines. But why is my rate half a point different this week than it was last week?
Well, first of all, your rate is not your rate until you've locked in with that lender. All right. So just because any lender out there says, hey, these are what the rates are today, it's not your rate until you lock it in. And so once it's locked in, that's not going to change as long as you close with that loan. The lock didn't expire and you close. That's going to be your rate for as long as you have that loan. If it's a fixed rate loan, we're not talking about adjustable rates. It's a fixed rate loan.
Right.
But why does it change from one day to the next? Well, again, the rates are based on a market, and that market, not to dislike the stock market, it has ups and downs. It's a bond market, and if the rates might be different today than they are yesterday, and that's because the market changed, right? So until you lock it in, it's not locked, and there's a risk of it changing on you.
Okay, and this might be a conversation for another day, but just briefly, how long can you lock for? Can you lock for a year? Like,
you can,
yeah.
But the longer you lock for, the more it's going to cost you.
Okay.
So if you do a lock for a year, most lenders would collect something up front from you. And there's lots of risks to locking for that long period of time. But typically rates are locked 30, 45, 60, 90 days. There might be a 75-day lock. That's pretty typical. Longer than that, it's possible if you're building a house, but typically they have to be tied to an address. Not always, but typically a rate lock has to be tied to a property address and a borrower.
Gotcha. Awesome. Sweet. All right. And then the last question I have is, are they always subject to change? Like, is the rates in constant movement if you're not locking in, like we just discussed, or is there sometimes where they might stay flat?
Well, the market might stay flat and the rates might stay pretty similar. I haven't seen a long period of rates staying exactly the same. Just haven't seen it in 20 plus years. But, there are some lenders out there that do what's called a portfolio loan. So their rates might not change for months at a time. But the standard lender out there with Fannie Mae, Freddie Mac type, delivering to Fannie Mae or Freddie Mac, conventional conforming, your bread and butter type loans, their rates are going to change on a regular and reoccurring basis. Now, there's some programs out there where you can lock and shop before you have a property. But anytime you go outside the norm, there's going to be some kind of cost or fee or some downside to it, regardless of what the salesperson says. It makes sense that if it costs them more, they're going to transfer that cost to you in some way, shape, or form. So the main points to remember is that everyone's rate is a little bit different, okay? It depends on your specific situation. Fannie Mae or Freddie Mac, or even if it's a VA, they have what are called price adjusters based on your situation. And all lenders are subject to them if they sell the loans to Fannie Mae or Freddie Mac. And some people say, well, they don't sell their loans, they keep all their loans. That's just not true. There's very few lenders very, very few lenders that keep all their loans, and they certainly don't do a lot of them. They might retain the servicing of those loans and you make your payment to them, but they've more than likely sold that loan to one of the big ones in the secondary market. The other thing to remember is that, the good questions to ask are, not what's your best rate, because they might give you your best rate and leave out how much it costs to get it.
Right.
But, you can even go to you might be at your bank at the window and look over and they are advertising a rate that was well below what your loan officer was talking about. But again, what were the rates and fees, the fees at that rate?
Yeah.
And so we see that a lot. We have clients that are like, you gave me this rate and, I went to my bank and I saw that. And then the follow-up question was, what did they charge to get that? Well, I don't know. And can they close in 20 days? Well, I don't know. Well, those are the important questions to ask. Can you deliver this rate on time as promised? What are the fees to get that rate? Can I see a loan estimate, or if there's no property address, maybe it's a fee worksheet. And then you want to compare apples to apples. And then we'll do another podcast about, compare loan comparisons.
Right.
But when it comes to rates, the most important thing to remember is that it's not what's your best rate, it's what's your best rate for me. And we look at all those items.
Right. Awesome. Sweet, man. Thank you. Thank you for all the information.
Cool. Well, that's about it for this podcast. So if you have any questions, comments, concerns, put them down below. Like, share, do all those things. And we hope to see you next time. Talk to you soon.